Hi and welcome to the Market Alert for Monday, the 7th of February 2022. So on Friday, cryptos jump, stocks slump as bonds and the dollar dump. Worst week for the US dollar since the election. And stocks and bonds slammed on good news payrolls. Surprise, good news is definitely bad news today for now. And also world food price accelerating January set for record high. Meat prices rose the fastest in a month. And not to leave the UK out of this overnight, Tesco boss warns of the worst of food price rises is yet to come. Well, I've been saying this for a very long time in the Market Alert for years about how the government have kept food prices outside of the inflation calculation, as they took it out many years ago, and have just managed to keep the illusion alive that there is no inflation when there's always been some form of underlying inflation. January payrolls, a huge beat, 467k jobs added as December revised massively higher. Earnings are overheating. Shocker, that's tongue-in-cheek of course. No surprise that they've readjusted the figures, as you can see there for Friday. We'll look at this in a bit more detail in just a moment. But first, let's have a look at the Dow. And there we go. This is the daily chart for the Dow. On Friday, the market ending up lower, closing at the 200 MA, and weaker overnight as well. This market is switching to a bear market, no doubts about that. Let's have a look at the weekly chart as well. While here, you can see that we've broken out of the range last week on the downside, and the same in the German DAX as well, which we'll look at shortly. But managing to get back last week above the 50 bar moving average there, and back above the 89. But once it starts to break below this, then it will continue to the downside. 30-minute chart of the Dow, as you see the release of the NFP numbers. Market slammed down, it was brought back, and then managed to give up some of the gains before the close. We've been down overnight, we've come back to the DP, and that's where the market has now found resistance. Coming back to here, and here is a 78% retracement, 50 bar moving average above this, and also some real support, real resistance to the left here as well, and also here. So the market looking weakish already before we even get to the futures opening. This is the 5-minute chart, a closer look inside, and there you can see the DP being broken at the moment. In the German DAX, you will see a similar picture, a lot weaker in the daily than the Dow for Friday. The market trading down to the 89% retracement. Price is finding support at this level at the moment. But again, in the weekly chart, you can see this defined sideways pattern for the German DAX at the moment. Let me just draw that in for you. And again, if we break this low, we're taking out these four lows, and then again same thing, down we go. But at the moment you can see how the market is churning in that sideways channel at the moment. But you can see that the downside is being tested far more than the upside, again confirming the weakness that we're starting to see in the German DAX. In the 30-minute, the market sold off from the open on Friday, trading down, even just a small blip to the upside, small bounce as the market tried to bounce, failed, and then it took until later on after the session had closed before the market found its form and moved to the upside. Not even got back to the DP in the German DAX at the moment. The close offering some resistance there as well. Overbought in the stochastics with some divergence there as well. So the market slightly weaker as well. Depends what the futures do when it opens. Have a quick look inside the 5-minute. At the moment, sideways as well. So obviously waiting for that futures market to open, which is another 20 minutes away as I'm actually recording. And then into the metals market, you can see there silver moving up on Friday. If you have a quick look at this, on Friday, as I waited for the NFP numbers, I also modified my order because the market had moved up the previous day, wouldn't go down. Let me just go back to this chart. The market wouldn't go down on Thursday. Friday it only came back about 78%, which was a pain. If you have a look there, I was hoping the market was going to break below the $22 level, and I moved my order that had been down below $20, as I mentioned in Friday's alert, just below the 22, but the market didn't come down to this level, unfortunately. This is the Dow on this side in the 1 minute after the news. So the market then moving back up during Friday without taking me into the trade, which is a bit of a pain, frankly, but you can see overnight they've managed to move the market higher as well. So it looks like at the moment, as far as silver is concerned, the move is over. I should have just gone below the 89%, but I was hoping we were going to get a retest of these lows, which we didn't get, and they had the excuse to do it. We're oversold now, so I'm expecting this market to move towards the upside. Let's have a look at the gold-silver ratio. I've not had a look at this yet this morning. Yeah, this dropping off, and as I've said before, this 81 level is a resistance and also lends itself as a support for the silver market in the daily chart there, which we've now seen 3 times. So yeah, we're up already on the overnight. I suspect that our friends JP Morgan and Bank of America, etc., will move the market down at 130. So what I will do is have a look, see if I can find a way into this using a retracement down at the 89% area. I'll have to use the 30-minute chart in the software though to find that sort of area. So from here up to here, that's where I'll be looking at, about 22.17 if they slam the price through the DP level there. In the dollar monthly chart we're looking at here, it's back below the 5-bar moving average. In the daily chart, we've been moving down. It's trying to move to the upside at the moment, but now it's got the 3 averages in the way there. It needs to take out the 89 on the downside, and once this really does move to the downside or accelerates, then we'll see prices moving sharply back down to retest these levels in the monthly chart. Meanwhile, gold sideways to higher, silver moving faster overnight than gold, which is why you're seeing the gold-silver ratio turning to red there. And finally, we've got crude oil. If I can bring up the right chart, crude oil is putting in a new all-time high at 93.96 overnight. Again, expect this to go to $100. I've seen news items now where they're talking $200 a barrel. That's going to make, if we go to $100 per barrel, we're going to get close to £2 a litre. If we go to $200, we're going to be at £2.50 a litre for fuel in the UK. So fingers crossed it doesn't. But what with the war drums in the background and whatever, and also the engineering of inflation, moving prices higher so that they can try and inflate the debt away, is the fundamental reason why you're seeing this. They tried their QE, it didn't work. They didn't get the inflation they wanted to hyperinflate the debt. So now the way to do it is through the cost of goods. And COVID has been the ideal candidate for that because of the supply chain breaking down, etc., which you can see in the Baltic Dry Index there. If we just can I actually do this? There we go. Let me just drag this. Let me just move that down so you can see it, and then drag it across. You can see that the shipping of goods has fallen out of bed. So the supply issue coming down the line as well. This is the number of containers that are moving goods around the globe. But as it says here, you've got the capacity between 48,000 and 60,000 tonnes. The Baltic Dry Index takes into account 23 different shipping routes carrying coal, iron ore, grains and many other commodities. So yeah, you can see that there's not a lot being shipped around. Bit of a bounce last week. So yeah, expect the inflation to continue, and also pressure on the downside to the stock market. Watch those weekly levels in the DAX, and I'll be looking for more pullbacks in the metals market to add to current long-term trades. Okay, that's it for this one. Actually, we haven't finished yet. News today. What have we got? And for this week, I forgot, nearly missed that one. The criminal's out today. She's speaking. Lagarde's out at 3:45. Rest of the week, FOMC, I can see there. European forecasts on Thursday. CPI is out on Thursday. It must be a holiday today then in the US, is it? That seems slightly odd why that would be out on Thursday. It normally comes out on Friday. No, we got US news on Friday, but there you go. So for some unknown reason, CPI is out on Thursday. Now it's forecast to be lower in the US. If it is, then the dollar will get some sort of relief and the metals will be slammed. Bailey speaking on Thursday as well. He's put his foot in it, hasn't he, with his telling people not to ask for any sort of wage increase when his salary is $570,000 a year. Great, isn't it? Breathtaking hypocrisy once more. So yeah, a bit of news out this week. I don't know why the CPI numbers have gone to Thursday unless there is a holiday today. Let me just check here. I've got the holiday thing highlighted in here, and I've not seen any other notices. So yeah, a bit odd that that's out on Thursday. Don't know why, but it is. So Thursday CPI, that's the big one for the week. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.